What if the best stock investments right now aren't the ones that everyone's talking about?
Impossible.
Sure, we're all constantly recommended the Magnificent Seven, which are Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, and Tesla. But what if there are better options out there?
I don't really see any other option.
Today, that's exactly what I wanted to talk with my AI assistant Tiara about, to see if we could find some diamonds in the rough that not everyone's talking about, and she really didn't let me down. Here's how that discussion went. Hey Tiara, based on current news, events, and metrics, what do you think are the 7 most undervalued stocks right now?
I have a great list of undervalued stocks I think will be perfect for you. I think what I'll do is first list all of the stocks, and then I'll explain my rationale for picking these stocks after that. Sound good?
That sounds good to me. But one thing, make sure that you watch till the end and see that last part where she explains her thought process about why she's recommending these stocks, because I want to make sure that you're fully educated on why these recommendations were made. And of course, before we get started, I do have to remind you that this video is for entertainment purposes only, and investing in the stock market does come with risks. So if you find yourself doing that, make sure you educate yourself and also talk to a professional. Now let's go ahead and get to the list of the stocks.
Stock number 7, Cisco Systems. You probably know these guys as the backbone of internet infrastructure, but there's more to this tech veteran than meets the eye. Market cap, $205.28 billion. PE ratio, 20.17.
Now you might be scratching your head thinking, hey, this PE ratio isn't screaming that it's an undervalued stock. And you'd be correct. Usually in tech, the PE ratio is right around 15 or so. So that's not screaming undervalued. But this is why Tiara made the recommendation.
Cisco's sitting on a mountain of cash. We're talking billions. This gives them a huge advantage for future investments, acquisitions, or even boosting their dividend further. Cisco's not just about growth. It's also rewarding shareholders with a solid dividend yield of about 3%. In today's low-interest environment, that's like finding an oasis in a desert.
I've mentioned dividend investing quite a bit on this channel already. And while dividends are great, one of the best situations you could get into is having a growth stock that is also issuing consistent dividends. And I think that Cisco definitely makes a case for that.
As the world races towards 5G adoption, Cisco's positioned to be a major player. They're not just selling hardware, they're providing the brains behind the operation. With cyber threats on the rise, Cisco's security solutions are more in demand than ever. Remember though, the tech world moves fast. Cisco needs to keep innovating to maintain its position, and past performance doesn't guarantee future results.
So a good recommendation here with Cisco. Now, when you take the fact that 5G adoption is definitely growing, and you pair that with a generous dividend that's been around for quite some time, then I could see why you might say this is undervalued. The next recommendation makes sense, but it was a little bit surprising, and well, you'll see why.
Stock number 6, Intel Corporation. Market cap, $93.39 billion. PE ratio, 94.96.
Now, if you base this strictly on PE ratio, it is absolutely time to run for the hills. But Tiara explains her thought process and why we, again, don't just focus on PE ratio.
The high PE ratio of 94.96 suggests that investors are paying a premium for each dollar of Intel's earnings. This is likely because Intel is competing in the chip manufacturing space, and even though Nvidia is doing really well here, the market is going to grow exponentially in the next 5 to 10 years. Intel also still has some potential catalysts that could be game changers. Chip manufacturing comeback. Intel's investing heavily in new factories and technologies to regain its competitive edge. AI and data center focus. They're still a significant player in the data center market, which is crucial for AI and cloud computing. Mobileye division. Their self-driving car technology subsidiary could be a major growth driver as autonomous vehicles develop. However, it's important to note that Intel faces stiff competition from rivals like AMD and Nvidia. Their ability to execute their turnaround strategy will be crucial.
To be completely honest, I didn't even realize that Intel had self-driving car technology and that they were also entrenched in the data center market. And both those opportunities in and of themselves are really, really lucrative if they do this right. I could see why Tiara would recommend this as well. The next recommendation is a stock that you have all heard of, and I gotta be honest, it's one of my favorites because it really does thrive in all economies.
Stock number 5, Walmart Incorporated. Market cap, $636.26 billion. PE ratio, 40.93.
Now, most of you might be thinking Walmart, isn't that just like a big box retail store? No, there's actually a lot more to it, especially nowadays.
Walmart's been killing it in the online game. Their e-commerce marketplace achieved more than 30% sales growth in each of the past 4 quarters, giving Amazon some serious competition. Walmart International delivered strong performance, with sales growing 10.6% on a constant currency basis.
Little known fact, I lived in Sao Paulo, Brazil about 5 years ago. And at the time, there was a Walmart there, and they actually left the country because the Brazilian government was trying to tax them to death. But it is good to hear that Walmart is expanding again internationally.
They're also investing heavily in automation, AI, and new business models. For example, they're expanding into advertising and fulfillment services for third-party sellers. Walmart offers a modest but reliable dividend yield, currently at 1.03%. While it's not the highest, it's been increasing for 49 consecutive years.
I really don't care about the dividend because I really like what the company's doing and the way that they're expanding and the opportunities that they're taking advantage of. But obviously, I'm not upset about the dividend either. But in my eyes, they're really the only true competitor to Amazon in regards to e-commerce. And I think that they have a ton of room to grow. Let's see the next one, which according to Tiara, this next one is going to be even further entrenched into the fintech industry.
Stock number 4, Visa Incorporated. Market cap, $555.76 billion. Price to earnings ratio, 29.91. Here's why Visa might still be a solid pick. With a market cap of over $562 billion, Visa is the undisputed heavyweight in the payment processing world. Size matters in this industry, giving Visa significant advantages in negotiating power and economies of scale. As the world goes increasingly digital, Visa's positioned to benefit. They're not just sitting back, they're actively partnering with fintech startups and exploring new technologies related to the blockchain.
I thought this was especially interesting. So we all know that the fintech industry is growing and cryptocurrency continues to blossom. And if Visa finds a way to intertwine their own company with those opportunities, the results could be absolutely massive.
Global expansion. There's still a ton of room for growth in developing markets where cash is king. As these economies digitize, Visa stands to gain big time. Resilient business model. Even in economic downturns, people still need to make payments. Visa's business has proven to be pretty recession resistant.
I think Visa is a solid blue chip stock that could be in your portfolio. Now, it's very unlikely that it's going to, double overnight, but there's obviously some very interesting growth prospects there. I'm really not surprised that the next one here is on the list, but I was a little surprised that it made the list as undervalued because it's already on the Magnificent Seven.
Stock number 3, Microsoft Corporation. Market cap, $3.2 trillion. PE ratio, 34.24.
Again, a surprisingly high PE ratio, but this was Tiara's reasoning for having it on the list.
Azure, Microsoft's cloud platform, continues to grow rapidly, outpacing the overall cloud market. It's a major profit driver with plenty of runway left. Microsoft's not just talking about AI, they're leading the charge. Their partnership with OpenAI and integration of AI across their product suite positions them at the forefront of this transformative technology.
To me, this is the biggest upside of Microsoft and why I actually hold shares myself. The reality is that AI right now, at this moment, the time of this video, is still in its infancy. And we have no idea how powerful it's going to be in the next 5-10 years. But the cool thing is Microsoft is very, very involved.
From Office 365 to Xbox, Microsoft has multiple strong businesses that provide stability and growth potential. Despite its size, Microsoft continues to post impressive growth numbers. In the last quarter, revenue grew by 8% and net income by 20% year over year.
Microsoft is one of those companies that has had insane success and growth for a very long period of time. And I feel like it's a pretty safe bet that they'll outperform in the future here as they have new technology, as they're more intertwined with AI, and they have a mountain of cash that they're sitting on. I feel like Microsoft is a really safe bet to outperform because, they're diving into these new technologies. They continue to adopt new things and get involved, and they just have a ton of cash to plow into any new endeavor, and they really don't even have to sweat it. The next company is not tech. And while I'm not surprised to find them on the list, I'm a little bit surprised to see, how high they were on the list.
Stock number 2, Berkshire Hathaway Incorporated. Market cap, $781.53 billion. Price to earnings ratio, 8.76.
First, I want to point out that the PE ratio of Berkshire is actually very low. Usually the average is about 15 to 20, so this is definitely a good sign. And what's interesting too is while everyone is focused on these, new technologies, these sexy things that are super cool and emerging, etc., Berkshire Hathaway, they don't really do that. They just focus on the boring businesses that aren't very sexy, but print cash.
Here's why I think Berkshire might be undervalued. Berkshire owns a slice of everything from insurance and railroads to tech stocks and energy companies. It's like buying a piece of the entire economy in one stock. Berkshire's sitting on a massive pile of cash. We're talking over $100 billion. That's a great resource for additional acquisitions or investments when opportunities arise.
I wasn't even aware that Berkshire had such a massive cash position. And the truth is, just that alone can bring about so many opportunities.
Many of Berkshire's businesses, like insurance and utilities, tend to perform well even in economic downturns. While some worry about what happens after Warren Buffett, his successors are already proving themselves very capable.
Admittedly, this is why I haven't poured more of my own money into the stock. Warren Buffett has kind of reached this mythical status in terms of investors. And you have to wonder, how are things going to go when the guy passes? And I'm not trying to be morbid here, but he's getting pretty old, right? So it is going to happen, but how does the company react at that point? The last stock is one that we all know, but probably haven't thought about in quite some time.
Stock number 1, PayPal Holdings. Market cap, $72 billion. PE ratio, 18.5.
Admittedly, this is one of the companies that I would never have suspected is undervalued because, frankly, it just wouldn't pop into my head at all. But let's see what Tiara has to say about it.
PayPal is a pioneer in digital payments, processing billions of transactions annually. With a fair value estimate of $92.72, PayPal is trading at a significant discount and has a 31.7% upside.
It's interesting how Tiara here dove into the actual upside numbers, right? She hasn't done that previously, but I can understand why she did. It's a good part of the argument.
PayPal owns Venmo, which is hugely popular among younger users. It's like having a foot in both traditional and next-gen finance. As e-commerce continues to grow globally, so does PayPal's potential market.
Now, I like these last 2 points a lot, right? Because PayPal, especially now, it's not cool. It's lost the cool factor. But Venmo, on the other hand, is cool and continues to grow. In addition, when you consider how much developing nations are adopting these technologies, it makes a lot of sense why Tiara would make the recommendation.
All right, now that I've given you the list of undervalued stocks, let's break down how I picked these hidden gems. First off, I looked at the price to earnings ratio, or PE ratio. It's like comparing the price tag of a stock to how much money the company's actually making. Next, we checked out the price to book ratio, or PB ratio. Think of this as comparing the stock's price to what the company would be worth if it sold everything today. We also considered the company's debt levels, as well as its competitive advantages and any upcoming events or trends that could give these stocks a boost.
The rationale here seems pretty solid to me. And I have to admit that I think it's pretty cool that Tiara just, she's not just looking at numbers, but she's actually considering trends and competitive advantages when looking at what stocks to recommend. Now, since you've watched this video, you're probably going to like another video that I very recently published with Tiara, where we actually did an analysis on the best dividend stocks. If you're interested in that, go ahead and click right here to watch that video. Or if that doesn't seem like it's for you, go ahead and click right here for my most recent video. If you did enjoy this video, please make sure to give it a like. And as always, make sure that you subscribe to the channel to unlock financial success one AI chat at a time. Thanks for watching.